All right, guys. So today is meta earnings. The market is correcting again. We kind of talked about it today. I thought the momentum was on the downside today, just because we've been moving up for the last like 2 weeks straight, and I just thought that the momentum was mostly on the downside. Today, man, huge pulls. Again, bullish or bearish on meta. Meta's quarter 3 earnings report and call. Vote in the poll. Let us know what you guys think. Yeah, it's kind of a tough day, man. A lot of people are expecting bear action today from this meta earnings call. What's up, DS? What's up, man? Yeah, I heard about MBLY. All right, so Elon is entering Twitter. All right, SPY at 382.30s. What a day. No, I'm seeing a video on. Oh, I don't know what he's doing. Did he delete the video? No. Okay. I guess it's symbolic for he's bringing in the kitchen sink. He's throwing the kitchen sink at it, maybe, or bringing in the kitchen sink. It's some type of analogy for he's throwing the kitchen sink at it or bringing the kitchen sink with him. You know, that's what it is. All right, guys. SPY up to 280, 383. Starting to rebound a little bit here. To clean it up, maybe. Hey, what's up, Break? What's up, Legend? Let that sink in. Yeah, I mean, he titled the Let That Sink In. Entering Twitter headquarters, let that sink in is what he titled it. So I guess that's the analogy. I completely missed that. My bad, guys. Time. Calls or puts on Meta. We're doing our poll. All right, we're going to do our poll as we always do. Market's bouncing back a little bit. Do me a favor as you come in, hit the like button as well. Looking at our poll, we got about 72% of bears, 28% of bulls. Starting to get a rebound here. I might start shorting the market if we can find something good enough to short. Depends on. I'm assuming we get a pullback from this, but I'm not 100% sure. We'll see what we get. Again, we're doing our Twitter poll, calls or puts. we go. We'll make this poll last about 2 hours. There we go. Poll is live. We're going to also send it out. See what the market does here. Just took another little short. Made about $50 more here in the market. Market's starting to flush. We are shorting. Again, you can see we got one contract of the E-mini, one contract of the regular. All right, we'll cut out of that one here just to show you guys my trades. Go ahead and cut out of this one too. Oh no, we just added to it accidentally. Oh. There we go. Cut out of that. All right, so like I said, I started to scale up my size a little bit. We are up on the day about 260 here, green on the day. You know, shorting with this downward trend that we're getting in the market. Here's Meta breaking down. It's at 129.20s here. Again, vote on the poll. So far on Twitter, we got about 22 votes already. 68% saying puts, 32% saying calls. So mostly bears. We got 53 votes. Many bearish from Q3 earnings. I'm looking for a surprise. Yeah, I mean, I don't know, man. Again, I can only speculate what we're gonna get for it. If I had to pick a direction, I would pick the downside, but I do think the extension might be on the upside for Meta as well. I think a lot of people are underestimating balance in markets, and I think that, you know, how did Meta perform last year is the question. So how did Meta perform? Meta's earnings report last time was let's see, Meta Q2. July 27th was Meta's last earnings report. All right, so let's see how they performed. July 22nd. Here's July. All right. It looks like they did bad. Yeah, let's get that away. July 22nd. All right, so here was their last earnings day, and they did do pretty bad. They dropped on their last earnings day from 170s all the way down to 167s. So basically from essentially 175 down to 160 something on their last earnings report. If we look at the 90-day ago chart, let's see if we can find it. All right, so this is July 21st. It's 22nd. We want to see July 27th, which was 24th, 28th. So this was Meta's last earnings report, July 27th. Oh, wait, no, this is June. I'm stupid. July 27th. All right, so here is July 27th, right? The earnings dropped here, and they performed negatively. They dropped from about 170 on earnings day on July 27th all the way down to the next morning. They opened up about 160, went as low as 156 the next day. So again, they did negative their last earnings, so maybe balance. Maybe we'll get a surprise bull action here. Well, the market is down right now is what's going on. So the market is down dramatically. Bro, I'm getting some weird leg pain. Does venous insufficiency cause leg pain? I don't know. I'm gonna put my mic over here. Does that still sound good? I'm trying to put my mic to where it doesn't keep getting disconnected like it did earlier. Does that still sound good? Is that still reasonable? All right. Let's see what Meta ends up doing, guys. Okay, so the earnings actually start. So the earnings drop at 4 p.m. Eastern Standard Time. Is when the earnings actually come out. Also, y'all do me a favor, hit that subscribe button if you have not already. We're getting ready to send out our newsletter here. If you haven't joined our newsletter, you'll get an alert anytime we do these big earning streams. You'll get an alert. It's completely free to sign up. There is our newsletter link. Go ahead and sign up to that. Again, we are getting ready to send out our daily newsletter, just reporting on the earnings. Again, starting to get some rebounds here. Bouncing back a little bit. I'm kind of tempted to short more into this, though. This looks weak, All right, guys. So again, look at the market rip back up. Good thing I didn't short this. Could have been bad. Again, will the market tank on this news? Is really the question. What the heck have I done? All right, guys. Market's rebounding pretty nicely here. Again, I'm kind of tempted to short it, but I think I'm just going to wait. Again, the expectational numbers for Meta are as follows here. So Meta, they're scheduled to drop exactly at 4:05 p.m. We also have Ford dropping earnings today too. Teladoc, Upwork dropping earnings. So Ford and Meta are both dropping earnings today, which are very relevant to market activity. Expectations for Meta are $1.88 per share in profit for EPS, which is profitability. Their sales revenue expectations are $27.87 billion. So again, those are their expected numbers here. If we look at this, let's see if we can find some more numbers here. Ford is expected to show up at 4:05 p.m. as well. 31 cent per share EPS is what they're expecting. 37.41 billion in sales revenue is what they're expecting. So Meta is projected to lose about 3.9% in growth, while Ford is projected to show about 4.8% in growth this quarter. Hey, what's up, Liv? What's up, Mr. Rich? Hope you're doing good, bro. Yeah. Yeah, for sure. Get it. I mean, my like I said, my legs are a little weird. I got venous insufficiency in my legs, unfortunately. Well, the market crash on Meta numbers here. We still got 30 minutes before they come out. I don't know, man. Again, we had a pretty good day. We ended up. This is my day today, guys. If you guys want to know what happened to me today, basically, I was shorting the market. I was down about $100, and then Canada came out saying that they were only going to do 50 basis points in terms of rate hike decisions for Canada. And so, sure enough, when they announced that, the market ripped up, and my short position lost money. And so you can see the market ripped up and then just tanked my short position here. Then I got frustrated, started trading the regular E-mini instead of the micro, and I literally haven't lost since then. I've literally had no losing trades. You can see every one of these move ups is green trades, not one loss since that point in time. So maybe I shouldn't have scaled up, but I do think I need to just scale up naturally. I think this is what I need to do. I need to wait patiently at the opening bell. Instead of day trading the open, I need to wait for like 15, 20 minutes to pass, really. And then I need to just trade the regular E-mini. I mean, we're making money. We've had 3 green days in a row, including today. If you look at this, like yesterday, we made money. The day before that, Monday, we made money. We made $170 Monday, so we're making money, but we do need to scale up some. Again, Meta bouncing back a little bit. Here's 130. This might be a support or resistance area for Meta. Like right here, this 130 level, might be a good support or resistance level to pay attention to. Yeah, I saw it, man. Let that sink in. The tweet, I saw it, bro. The Twitter deal, who knew, man? I never in a million years thought the Twitter deal would go through. I really didn't. I did not think. I did not think that would go through. So I'm honestly really surprised that the Meta deal is. I'm really, really surprised that that deal's going through, man. I never thought that would. I didn't think it would. SPY pulling back a little bit. Meta pulling back some too. And again, guys, Meta earnings drop right at 4 p.m. All right, so yeah, Meta earnings are scheduled to drop right at 4:05 p.m. All right, so the actual earnings call here for Meta is going to start at 5 p.m. So again, getting a little bit of a dip. Meta earnings release forecast to plunge over 40%. Yeah, man. Tesla, TSKA. Do you own any long-term portfolios or do you solely day trade? Appreciate your work. No, I definitely don't solely day trade. I do a little bit of everything, man. I day trade, I swing trade, I invest. If anything, my best trades lately have been swing trades. Like I bought Snapchat a couple days ago, was very vocal about it. I bought Snapchat at like $8 or something, eight bucks. Right after the big earnings tank. I'm a bottom feeding dip buyer. People say don't catch a falling knife. I'm trying to catch falling knives. Again, people hate on it, but like I've made so much money swing trading lately. My best trades lately have certainly been swing trades. Again, the last week I bought Snapchat right after the big earnings drop. Eventually, it rebounded about 25% within 3 days. Made a ton of money. I had hundreds of shares of it. Disney, I just got out of my Disney swing trade yesterday. Bought it at 91.60s, sold it at like 102. And so my swing trades have actually been a lot, better. My day trading is okay. Like I'm a good day trader, I would say. At least I think I am. But my swing trades are better. My swing trades, I think I rely on objective value, and I think that when you look at objective value, instead of getting emotional about it, which a lot of people get emotional about stocks, like they bring politics into it or whatever, right? I don't look at any of that stuff. I look at solely what the company is and objective value standards, and I look at how cheap it is relative to what it should be, and I try to buy that dip. The earnings drop at 4:05. They're scheduled to come out right at 4:05 Eastern Standard Time. So right at the closing, about 5 minutes after the close, they should be dropping. Hey, nice, Michael. Hey, good trade. I am just the opposite, great day trader, but lousy swing trader. I just find swing trading easier, to be completely real. I think swing trading is noticeably easier. Day trading, it can be a lot more emotional, as opposed to swing trading where you just kind of buy it and you sit. And if you're wrong, fine, but you don't have as many opportunities in swing trading to make emotionally bad decisions. Like day trading, you can get in your head. Poker players call it going on tilt. And in day trading, you can go on tilt really, really easily and just destroy your account. Swing trading is a little bit harder to do that. And so as long as you're careful and as long as you're somewhat decent at analyzing movement, swing trading is noticeably easier for me. Hey, thank you, Carl. Yeah, but point is, my swing trades have been better than my day trading lately. I mean, I'm green in day trading over the last month, but like I can do better. I think. Like again, here's me. October. This is my graph for October in terms of pure day trading, pulled straight from the platform I'm using. So that's my graph. Could be better, I think. With the size of account I have, it should be better. Got to scale up. I'm not lying when I call myself a wimp. But I think that's what should be respected is conservation, of accounts. Everybody can gamble and YOLO. Not everybody can not. But I'm probably just biased because that's how I trade. But yeah, SPY moving up here. I think the interesting thing to look at is this resistance right here. We got a lot of tops right at this level. If you extend it here, you got a lot of tops. All right, so we're again, this is the big level to see if we reject here. Meta is actually moving up here. So here's Meta on the left. Meta's moving up. It's up to 130.30s. 4 p.m. Eastern Standard Time. Again, here goes the SPY testing that level. We'll see if we actually hold. SPY rejecting a little bit at 382s. Hey, thank you, Carl. It says, thank you for answering my question. Or appreciate you answering my question. I always tune in for the channel when we have earnings. Definitely the clearest channel around for earnings info. Best of luck for the rest of this week, man. Hey, you as well, Carl. Thank you for chatting with us today, man. Not saying anything positive for Meta, given Google misses. Yeah, a lot of people are skeptical over Meta. A lot of people are worried it's going to tank and crash the market, to be honest. Like, that's what everybody's kind of worried about. Um, we'll see. I'm not sure. We'll see. Time will tell. Could go either way. I think last earnings report was negative for Meta, and I think companies try to do a good job at balancing out. I think companies like this, they understand how it can snowball and get worse and worse and spiral out of control if they start to report over and over again misses in terms of earnings. And so I think in that regard, there might be a bullish argument for it, but I really don't know. We'll see. SPY starting to move up. And again, we got about 18 minutes before the actual earnings drop. The actual earnings call is going to be at 5 p.m. Eastern Standard Time. So 5 p.m. Eastern is when the next earnings call is going to be. Hey, thank you, Michael. Hey, I appreciate it, man. Yeah, we tried, bro. We tried, dude. We like I said, man. I mean, we try to just put we try to put everything out there in an understandable way. Is what we try to do, and I think it's important for people to understand the basics of this stuff, because if you can understand just the basics, right? Swing trading and investing can be incredibly simple. You can make a lot of money. You don't have to give your money to to Edward Jones or whomever. You can just take your money and again, diversify, research healthy blue chips and sit on them for years. And I think that's the best way to grow wealth. That's what Warren Buffett really acquired companies, is what he did. But that's the best way to let your money work for you if you're just sitting on it. If you got some money and you're just kind of sitting, that's the best thing to do, is stick it in an index fund. If not an index fund, stick it in blue chips, let it sit, diversify. Make sure you analyze obsolescence and kind of what happens in terms of some of these companies that are going to go obsolete from other companies, and invest in the smart ones and just kind of sit. Easiest money in the market. Warren Buffett's value investing is the easiest money to make in the market. You're almost guaranteed to make money if you diversify well enough and you sit. Elon Musk said a beautiful thing about Twitter is how it empowers citizen journalism. People are about to disseminate news without an establishment bias. So Elon entered Twitter here. So Elon did enter Twitter. So again, it looks like the deal is going to be done. A lot of people are speculating that the deal is going to be done by the end of the week. I'm going to retweet this, and if you guys want to see the tweet of Elon, joining or entering Twitter with the kitchen sink, I'll post this link here. Great way to help support the channels by following our Twitter. There's the link in chat right there. Twitter.com/beginnertrades. You can go check out the link of Elon coming or entering the Twitter door with a sink in hand. He actually had a literal sink in hand, saying, "Let that sink in," is the symbolism he was using. But yeah, check it out. There's the link in chat. Do live S&P 500 trades during regular hours? Not S&P 500. We live E-mini, which is the S&P 500. So yes, essentially, we're trading basically the S&P 500 at the opening bell. We day trade. Hey, what's up, Wolf of Jersey? What's up, Michael? Messi or Ronaldo? I mean, if I'm being completely honest, I don't know. I know I know Ronaldo and I know Messi. They're soccer players, but I don't think I've ever watched a game of soccer in my life, bro. I'm a football and baseball fan. How about those Astros, though? Yeah, Elon. Chief Twit, isn't it? Elon's new name, Chief Twit. Um, all right, guys. Market's still pumping up. Meta still broke, but low 130s here. So still under 130s. Yeah, as a Dodgers fan, honestly, the Dodgers were good, bro. Honestly, they should have never gotten rid of Trevor Bauer, though, bro. Like Trevor Bauer, like while he might be a freaking complete weirdo when it comes to you know what? Here's the problem, right? Is Tatis didn't like Bauer, right? Tatis did not like Bauer, right? So you're telling me a girl that didn't like, or that a girl that previously had dated Fernando Tatis made the accusations against Bauer, and that they investigated it and actually found Bauer innocent. Like they weren't even close to filing real charges on him. But the Major League Baseball, but the MLB still banned him for 2 years as a pitcher, which is basically a death sentence. Like that whole thing is crazy to me. For the Dodgers, like that whole freaking thing is just ridiculous. Again, I think he was probably set up. Tatis had dated the girl previously, and Tatis and Bauer hate each other, right? And so I think Bauer was probably set up. I think he's a complete freaking weirdo, but like, they still kind of did him dirty. I think, in my opinion. Meta at 129.50. Let's see if it breaks down. Yeah. At 129.30s for Meta. Again, let's watch this low down here at 128.50s. 129 up there as well. Hey. Yeah, we don't watch soccer, bro. No offense, but soccer's boring, dude. Watching a bunch of guys kick a ball around for 3 hours, you know, just doesn't do it for me, Like, I can understand why people would like it because kind of like baseball, where baseball is mostly dull. I have a theory as well, which is that baseball and soccer are forms of kind of dopamine detox where they're really, really boring most of the time, right? But you have small moments of just really big excitement in them, right? And that makes it addicting. It's kind of like the UFC, right? You might watch a bunch of fights, nothing happens, and then all of a sudden, boom, some crazy thing happens, right? I think that is, I don't know. I think that's kind of relevant there, but I just never got into soccer. I played baseball when I was younger, and so it was a little bit easier for me to get into. Market's breaking down here. Market's down to 382s, 382.40s. Meta is at 129.30s. Look at the market break. SPY breaking down. Hey, thank you, man. Yeah, I knew the baseball one, and I get it, bro. I get it. Like I said, I just never got into soccer, dude. Market started to tank here ahead of these earnings, though. These earnings are coming out. Market's starting to really, really tank. And your earnings drop in 15 minutes exactly. Let's see what happens. We're gonna stream the 4 earnings call as well. SPY dropping big though. 382.12s, 382.10s. Market's tanking. Meta's starting to drop here also. Y'all be careful, bro. Again, waiting for the Meta earnings to come out. They should be dropping sometime soon. Again, we got a little pop up here. I'm kind of tempted to short, and I might short a little position here. And take 2 little positions. See how these come out. Up 15. Took half off there. I'm going to take the rest off. Just made about 15, another little $20 bill from that. Again, here is the graph today. We get a little bit better in terms of calculated swings. Again, we are up about 280 right now in the day. 280. Looks like we got out just in time, scalping that momentum. But look at Meta. Meta down to 129.30s here. Looking like it's struggling. Do you see Google pumping tomorrow, dumping? I'm not sure. Really, no idea. Yeah, do me a favor, hit the like button. We got about 15 minutes still until the actual Meta earnings report. Meta starting to bounce back a little bit here. Look at Meta up to 129.50s here. SPY out 382.40s. We can look at the Q as well if you guys want. Google hitting 200 moving average. SPY moving up a little bit. Again, I think the extension is definitely on the downside now. Not a bad little day, though. Yeah, we never know. You know, I don't know. Who knows what we're going to get here with this stuff. Again, last time they did bad. I think the time before that we did bad. Let me see if I can find the EPS. Let me see if I can find a Meta. Yeah, macro trends is where I like to look at this. All right, so Meta 2021 EPS was 1377, which is a 36.47% increase from 2020. 2020 EPS was 1009, a 57% increase from 2019. 2019 EPS was 643, a 15% decline from 2018. Basically, for the last 12 months, their EPS is about 12.04%, which is down about 11% year over year. Their EPS for the quarter ending last quarter was 246, which is 32% roughly down year over year for Meta. So all right, for 2021, 2020, they have been making more revenue. Gross profit has been going up every year for the last few years, but I don't know if that's going to be affected by this. Meta bouncing all the way back up to 130s here. So look at Meta pop. I was going to make sure that sometimes they'll release them early. But look at the big pop. This isn't anything enough to... Let's see, look for a rejection right here. 130 is a relevant technical level. Yeah, looking at this site right here. You can kind of see, here's their earnings per share. This is Meta's earnings per share over the last few years since 2020. Last quarter, the quarter two results were 246 per share. And again, EPS is profitability, basically how profitable Meta was. In quarter two, they were about 246 EPS. In quarter one, they were 272. So we've had a downward EPS trend since the fourth quarter of 2021. Meta has actually been trending down in terms of EPS. Now, again, companies generally do a good job at balancing things. You know, Mark Z sees this, and he's going to probably try to do everything he can to not have another drop. But at the same time, though, when we look at what's expected here, we're only expecting 188. So we're expecting about right here, you know. So the next bar would be about right there, you know, about 188, right about there, right? And so, I mean, that's a pretty bad trend for Meta going forward. And again, let me know what you guys think, but, you know, it's not looking good. Sales revenue is expected to come in at 27.87. At the same time, though, because the expectational numbers is only all the way down at 188, that does give them some room to do better than expected, right? So since we're so low in terms of expectationals here, there is a argument that, hey, maybe we're gonna do better than expected then, because it's not about what we did last time. It's not about anything like that. What it's about now is, are we going to come in better than expected? Expectational numbers for Meta: 188, estimate of 27.87 billion in sales revenue. Are we going to come in higher or lower than that as the expectationals? And I don't know. I really don't know. Let me know what you guys think. Are we going to do better or worse than that? Again, they're supposed to come out in about 5 minutes, or in about 8 minutes or so. The numbers are supposed to drop. Yeah, we'll see. The bar is so low for Meta that they could show any glimmer of something positive and it will rip. Yeah, I mean, that's what I'm saying. If we're trying to sell a bull argument, we did reject at that 130 level. Again, a big technical level. You can see we actually did reject completely off of that. So a big rejection there underneath that. You can do me a favor, guys. We do have almost 300 people here, so if you haven't already, hit that subscribe button, hit the notification bell. We certainly appreciate it. We are going to put it in sub-only mode as well, and so if you haven't already, hit that subscribe button. We certainly appreciate it. The Meta earnings are supposed to be dropping sometime in the next 7 minutes, to be exact. 7 minutes. SPY actually breaking down here. We're at 382s. Everybody announce yourself. Show that you're subscribed. Show you're supportive. We appreciate you all for sure. But yeah, look at the SPY break here. SPY breaking down. We're at 382s, 381.90s as we speak here. So the market's starting to break down. Hey, what's up, Greg, Pat, DS? Hey, thank you, team. Market's breaking down here. Let's see if it drags Meta down with it. Again, Meta's going to affect the broad market heavily here. Break, Mark, Dan. Hey, thank you, team. Again, starting to break down. We're at 382s. Hey, what's up, Sandy? Thank you. Thank you, Octavius. I appreciate you. Fish. Again, spied out at 381.90s here. 381.90s. Hey, what's up, Michael? Hey, thank you, brother. Yeah, SPY breaking down. Again, Meta breaking down here. Again, the Meta earnings are actually supposed to drop at 4:05 p.m., man. Look at the market tank here. Again, SPY all the way down to 382s, under 382s. Ivy is going to crush you guys. Hey, we'll see, man. Hey, thank you, Nick. I'm going to sit this one out today. Was a big winner. Hey, congrats, Trip. Lucas. Ivy is going to crush. Freedom, my guy. Thank you, brother. Way of base. Thank you, man. Ford reporting earnings, too. Yeah, Ford is dropping earnings. They're both scheduled to drop right at 4:05 p.m. So right at 4:05 p.m. is when they're scheduled to come out. And we're going to cover them as soon as they drop. Don't worry. So we're going to cover these as soon as they come out. Again, we'll see if we say something good here. Market's starting to test lows here. Again, if we're looking at analyzing, the closing market closes at about 15 seconds, 10 seconds. The dollar index is moving up now. All right, big bounce in Meta, big bounce in the SPY here. There's the closing bell. All right, so there's the close. Guys, so there's the closing bell. And again, we got a couple minutes before the Meta numbers are actually set to drop. They're supposed to come out at 4:05. Sometimes they drop early, though. We're watching for them now. Yeah, be ready here. Again, hit the subscribe button if you want to join the conversation. We'll see when they come out. Here's SPY on the right. Let's put up Ford here because Ford could be dropping theirs any moment, too. Oh, wait, what's the new symbol for Ford? Okay, this is the right one. Why isn't pre-market showing up? Weird. Maybe Ford just hasn't moved in pre-market. All right, guys, waiting for Meta. Nothing yet. Again, they're scheduled to drop exactly at 4:05 p.m. Eastern Standard Time, exactly at 4:05. Again, looking for Ford. Nothing out yet. There's Ford. We got Ford on the right. We got Meta on the left. Waiting for these numbers. $130 right now. I'll get about 4 minutes before the Meta numbers drop. About 4 minutes. Getting some volatility. There's Ford pop. There's Meta move up a little bit here. Nothing yet, I don't think. Ford moving up a little bit. All right, nothing for Meta. Look at Ford pop here. Ford up to 1290s here. Nothing out yet. Nothing out for Ford. All right, Ford's probably just consolidating back and forth. I guess 3 minutes. 3 minutes. Nothing dropped yet. Patiently waiting here, team. Patiently waiting. Let's see if we get something good. Again, y'all subscribe if you haven't. Bitcoin. Yeah, Bitcoin's going to be influenced by tech for sure, especially Meta. With Meta being so ingrained into the metaverse, even to change their full name to Meta, it's certainly going to impact cryptocurrencies. It's certainly going to impact Bitcoin. Like, for sure. Like, without question, it's going to impact Bitcoin. It's going to impact cryptocurrencies. Meta comes in better than expected. Bitcoin's probably going to run. Meta comes in worse than expected. Bitcoin's probably going to tank. Ford's not really going to have much influence, except for the market influence that Ford has. But yeah, nothing out yet. Market consolidating, Meta consolidating. Again, it's scheduled to release in 2 minutes. Scheduled to come out in 2 minutes. And again, let me look at your predictions here. Right now, 35% are bullish on this earnings report out of about 370 votes. Y'all can vote on that poll if y'all are interested. 65% are bearish. Again, not really getting any movement yet on Twitter, which we got a number of votes on Twitter. We got 55 votes. 44% are calls. 56% are puts. All right, no reaction yet. Meta up to 130.50s here. No volume yet. We got to wait for volume to show up for earnings. Nothing out for Ford either. Again, about a minute before it's scheduled to drop, guys. About 1 minute before the earnings are coming out. About 1 minute, guys. Meta up to 130s. Ford at 1290s. Look at Meta. Meta's up to 131, starting to test. Ford still at 1280s. They're both scheduled to drop exactly at the same time. Let's time this here. Again, about 20 seconds, guys. 20 seconds before Meta drop. It's at 131 right now. About 20 seconds until Ford comes out. About 1280s. Again, no reaction yet in stocks. All quiet before the drop. 1290s for Ford here. Meta starting to get some volatility ahead of this. Potentially 5 seconds. Y'all be ready. And there's 4:05 p.m. Let's watch for reactions here. Here's when the earnings are scheduled to drop. Nothing yet. Nothing yet. There's a big run up. Here's the earnings for Meta. They must be out already here, guys. Meta popping up big. It's at 135, 137s. Ford doesn't look like it's out yet. Let's see what Meta's showing up as. All right, Meta numbers are out. Initially a positive reaction. Meta showed 164 versus 188 EPS, revenue of 27.7 billion. So they did better than expected for revenue, worse than expected for EPS, which is very strange. Why is Meta moving up? Again, their EPS came in lower than expected, 164 versus 188 expected, revenue of 27.7 billion, higher than the 27.38 billion estimates, but I'm not sure why they're moving up. I'm really not sure why they're moving up. Same thing that so I'm really not trusting this. Ford, nothing out for Ford yet, waiting for that to come out. But Meta actually had worse than expected numbers here for Meta. Worse than expected results. Meta came in again at 164 EPS versus 194 estimates. Sales of 27.7 billion, worse than 27.53 billion estimate. So there's Meta's correction here, and I mean this was inevitable. I think again they came in worse than expected. I don't know why we had such a big pop, and there's the reversal. Again, like I said, man, I told you guys at least a minute ago that Meta came in worse than expected. Ford just dropped. They came in at 30 cents per share, missed the 32 cent estimate. So Ford just dropped as well. Sales beat expectations. So Ford was mixed. We're going to put both of these numbers up on screen. So Ford might reverse, but here's the full numbers down there. But yeah, Meta had worse than expected EPS, better than expected sales revenue is what happened. Ford missed on EPS but beat on sales revenue. So they both did the same thing. They both missed on EPS, beat on sales revenue. And so they both kind of came in neutral here. Meta guidance is out now. So Meta is seeing, if I could see this here, Meta sees 30 to 32.5 billion versus 32.31 billion estimates in terms of their guidance numbers. We're going to put those numbers in chat. The guidance was basically on par, maybe a little bit lower. They expected 32.31 billion. So once these guidance numbers dropped, you can see Meta absolutely tanking down here. It's at 126.90 right now, 126.90. You got Ford over here. That's not really moving much. Mixed results for Ford. Facebook daily active users is up 3% to 1.98 billion. 1.98 billion. We're going to post this number in chat as well. There is the link. Again, Facebook's Q3 daily active users is up to 198, 1.98 billion. So almost 2 billion daily active users for Facebook, up 3% year over year. Monthly active users is at around 2.96 billion, which is up 2% year over year, according to Benzinga. Ford raised their full year adjusted free cash flow guidance as well. And so Facebook actually, had an increase of their daily active users, but their guidance was neutral to down. They missed on EPS and they beat on sales revenue. So yeah, essentially right now, Ford did good across the country. Meta says in the third quarter of 22, ad impressions delivered across our family of apps increased by 17% year over year, and the average price per ad decreased by 18% year over year. We're going to put that number in chat. You can see all these. You can see what we're reporting on some of the stuff said by Meta. Meta also said, quote, "We are holding some teams flat in terms of headcount, shrinking others, or investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 23 will be approximately in line with third quarter 2022 levels here." And you can see that number. We're reporting that number right here in chat. So again, they narrowed 22 total expense guidance from 85 to 88 billion to 85 to 87 billion. So they slightly lowered their total expense guidance, which should be seen as a positive here. And again, I'll post this number out in chat. Again, we're posting everything that we see here for Meta and Ford. Again, Ford Motor raised full year adjusted free cash flow guidance from 5 to 6.5 billion. I won't be surprised if we see Ford rip up here. Ford basically raised their adjusted free cash flow guidance from 5.5 to 6.5 billion to 9.5 to 10.5 billion. That's a lot of extra cash flow that Ford Motor Company is going to have here. And so while Ford is down right now, I might actually buy this dip really quick here. Let me see if I can. Where's my mouse? Oh, there it is. I might actually buy this dip in Ford. I'm going to take 45 shares. We'll take a little bit more than 45 shares, actually. 70 shares. Yeah, I think 70 shares is probably reasonable. We're going to buy a little dip in Ford. Again, Facebook's starting to rebound here. Ford announces the company is also resuming a modest share repurchase program to offset the dilutive effect of stock-based compensation. Directors approved the repurchase of up to 35 million shares over time for that reason. Benzinga, messy. All right, remember, guys, stick around. We are going to be streaming. The full earnings call live right at 4 p.m. Eastern Standard Time. So stick around. Yeah, hey, y'all be sure to like and subscribe for more free trading content. We appreciate it here. Wait, let me put that up. So that's Meta. That's Meta's numbers. Again, we're looking up on updated news. That's about it for now. Again, daily active users, Meta sees fourth quarter revenue. Yeah, so basically Meta says that they are going to be shrinking some parts of their company and increasing, basically hiring more and only their highest priorities. They expect their headcount at the end of 23 to be in line with third quarter 22 levels. They said that in the third quarter of 22, ad impressions delivered across our family of apps increased 17% year over year, and the average price per ad decreased by 18% year over year for Facebook. Again, Meta's down. The Meta call is at 5 p.m. Eastern Standard Time. What is LC? Lending Club? So Lending Club didn't end up reporting theirs yet. It doesn't look like. Okay, Lending Club posted adjusted EPS of 36-cent profit, beat the 33-cent profit estimate. Sales beat expectations as well at 304.9 million versus about 294.83 million estimates. All right, so hey, listen, you guys saw me buy Ford. Essentially, I think the market is probably just now reacting to all this free cash flow. We're going to take a little piece of it off and stick with 50 shares, but just lock in about a third of profit just in case, it turns around on us, but we'll let the rest sit. Earnings are mixed. Fed. They're mixed. They had good EPS, or they had bad EPS, which is profitability. So their profitability was bad, but their actual sales revenue went up and was better than expected. Is essentially what happened for both stocks, for both Ford and Meta. Hey man, but I'm really, maybe I should have taken larger size in Ford. I didn't quite take enough, unfortunately. So I didn't quite buy enough of Ford. We ended up getting out of our Snapchat trade. We're flat on that. We made enough money on it. Starting to pump up. We're at 1290s right now. 1290s on Ford. Should have bought more. But again, let me know what you guys think here. I don't know, Herschel. We'll see, man. How's crypto reacting here? Meta down to 120s here. How's crypto reacting here, guys? Meta looking weak, under 120s now. Again, Ford dipping down to 1280s. Meta starting to test lows here again, guys. Look at forward breakdown here. So it looks like it was right to take that profit. Looking at Bitcoin, we're peeping it out now. I mean, Bitcoin's up 3.5%. I mean, Meta's down, you know. So like, what the heck have I done? Where's my chart? There it is. What the heck? All right, there we go. Oh, yeah, Bitcoin's at about 20.7. I mean, Bitcoin reacted to it. It just didn't react heavy to it. You know what I mean? Like it reacted. It dropped. It dropped from about 20.83 thousand to 20.75 thousand. It just didn't brutally react to it, but it did drop for sure. Again, y'all do me a favor, hit that subscribe button if you haven't already, guys. So yeah, again, everything we do here is free. We don't charge a penny for anything. We just kind of give everything away for free. So if you haven't already, hit the sub button, hit the notification bell. We certainly appreciate you all, and appreciate the love and support that we've gotten over the last couple months. It's been amazing here. Again, we'll see how this impacts markets for Meta here. Meta down to 117. It's looking weak. Breakdown, we're at 117.50s. Again, we're testing this low. The new low is, I can't even make this up. The new low is 116.66. So 11,666 is the new low for Meta. Now it's down. Okay, it's changed. It's down at 116.20s. Yeah, that's right. Y'all hit that sub button, guys. Help me hit 90,000. We're getting close. You know, we're getting close. We're at 89.5K. Help me hit 90,000. We really want to break. I'd really love to break 100K this year, and we're getting pretty close. Meta breaking down big at 115s here. 115s. Meta big breakdown. Remember, guys, we do have the earnings call today. So the earnings call is going to be live today. Remember. Where do you get earnings from? I get them from a bunch of different places, man. We use Benzinga. You know, again, if you want to check out Benzinga, I got a lot of them from Benzinga, but earnings are reported everywhere. You know, like y'all are asking me like it's a secret, you know, earnings coming out. Earnings are dropped to every major news source. Yeah, earnings are released to every major news source. You can try Benzinga out for free for 2 weeks if you click this link, you know, try it out. But earnings are released to every major news source, you know. It's not like I'm hiding it, you know. 115's down for Meta. 115's down for Meta. Hey, all good. Thank you for your coverage, man. Managed to short the pump at 139.22. Thanks to you. Hey, nice, Chef. Hey, congrats, bro. Good trade, dude. Nice work. Hey, what's up, Bulldog? Hey, what's up, brother? Hey, yeah, man. Meta's breaking down, bro. Again, a lot of people predicted this. You know, looks like they were right. Meta breaking down. I will make a snow angel in my pajamas in the middle of Alaska live on YouTube when you hit 100K. Hey, thank you, Bulldog. I appreciate it, man. Everything helps, bro. Everything helps, you know. They are always super late. Earnings aren't. Yeah, I mean, there's a lot of places. Yeah, look at any major news source. Benzinga, you could try them out for free. TD Ameritrade's pretty quick too, you know. Earnings Whisper, you know. Earnings Whisper is a little bit slow, but you know, just subscribe, bro. You know, we'll cover all the big ones. Don't worry. Still breaking down now, 114.12. Is this going to drag the market down with it? So the forward, we ended up buying a dip in forward. We're just kind of sitting on a piece of it. Small little trade. Is the SPY falling down with Meta? Not really. So again, the market's not really getting affected heavily by this Meta catastrophe. Market's not really dropping majorly from this Meta catastrophe here. Yeah, so again, Meta breaking down here. Meta breaking down. $114s. Low of the day is now 113.50s. Hey, but no, thank you very much, Chef. I appreciate you, brother. Thank you so much, man, for the $10. Sorry, I think I might have forgot to thank you, man. If I did, my apologies. Thank you so much, man. Strange, right as everyone was waiting for Meta and still market does not react. I bet you the Qs probably reacted a little bit more here. Yeah, I mean, the Qs reacted some. I mean, here's the thing. Okay, never mind. I was going to put up some argument about why the market didn't react. I mean, here's one of the reasons that this could be happening is because another company had good earnings on top of it, right? So it's kind of mixed between the two. Ford did a little bit better than expected. Upwork did better than expected. Teladoc did better than expected. Wolfspeed did better than expected. AVT did better than expected. So again, one of the reasons we could not have a huge reaction. Now did better than expected. TDoc did better than expected. Ford did better than expected. KLAC did better than expected. Upwork did better than expected. Lending Club came in at 41 cents per share, better than expected. United Rentals did better than expected. Wolf, AVT did better than expected. CACI. So again, one of the things that could be justifying the market's lack of response is the fact that we had a lot of other positive earnings today. And so that's the only thing I can think of. Now, Meta was definitely the biggest one. And then tomorrow is really the biggest one of the week. Like, Meta's big and all, but tomorrow's is big. Tomorrow we got Apple, the Titan. And so, again, we'll see if we get something. Tomorrow we got the Titan, we got the Titan of Apple. Tomorrow we have Apple and Amazon. Two of the largest companies in the world. Those earnings of tomorrow, those are going to be chaotic, for sure. Yep, same time always, man. Same time. Like I said, y'all sub, man. We do this live every day. We cover. Listen, we cover every major economic thing in the market. Every major thing you want to catch. FOMC rate hike decisions, Jerome Powell press conferences, major earnings reports. We day trade, swing trade, and invest. We throw around about 120K in buying power every morning. We cover all the major things. FOMC rate hike decisions, CPI reports, PPI, PCE deflator, retail numbers, jobless claims report. Inflationary data and news, other countries' bank rate hike decisions and all that stuff. So again, we cover all the major stuff. Subscribe. I would never pressure you, but if you don't, I'll hate you forever. Okay, do it now. You want to, and we appreciate you all. Are you guys gonna buy the Meta dip? Is a question. Yeah, 2.4 trillion, huge. Apple will be ridiculous, bro. John will add membership to channel for what? You can become a member. I mean, you don't get much from it. Again, we don't sell anything. And so we don't really sell anything. And so again, what you get for becoming a member is this. These majestic. Some call them majestic. I mean, I don't know what, beautiful, some would say. Majestic. Magnificent could be one, an adjective I would use to describe that emoji. Let me know what you guys think. But yeah, Meta up to 115.60s here. Q's not really breaking down. Tomorrow we also have some earnings in the morning, specifically Shopify, Caterpillar, McDonald's, MasterCard, Southwest, Merck, Altria, Hertz, Pfizer. So just a lot of stuff dropping. Not Pfizer, but a lot of stuff dropping tomorrow too. So again, y'all be ready. Again, Meta started to rebound here. Any guess on APPS earnings? Is that a company? What company is that? Hey, what's up, Michael? Yes, sir. Great movie, man. Honestly, that movie is really what got me involved with trading. Like, The Big Short is the movie that got me involved with trading. I'm gonna stand up. I got sun in my. Y'all know, like, for whatever reason here, Carol was experiencing it yesterday. The sun is just in my eye, bro. I gotta raise this. There we go. That's better. All right, guys. Meta started to bounce back. The Q is bouncing back here as well. You can see the Q on the right, up to 278. Yeah, Big Short, great movie. I watched The Big Short with Carol. I had no idea what a short was when I went to see it, to be completely honest. I went to see The Big Short, and like I just got hooked, man. I went to see The Big Short. This was like 7 years ago. I went to go see that movie. I've always been kind of like a chess poker player, you know, like I played chess, I played poker a lot. I like strategy games. And so in that regard, you know, when I saw The Big Short, I just kind of got hooked to trading and really wanted to learn, which is kind of what I credit to me starting, you know, the community here. Other trading movies, well, you got to see Boiler Room, Wolf of Wall Street, The Big Short, Margin Call. Really, really good one is Margin Call. A lot of people, you know, miss Margin Call. Margin Call, great trading movie. I don't really know anything else. I mean, other trading movies, stuff like that. Margin Call, Big Short, Wolf of Wall Street, Boiler Room. Those four are probably the main ones that you want to see. Billions is good. Billions, the series is good. It's about a hedge fund owner. That new show Industries on HBO Max is okay. I've seen 2 episodes. It's all right. They're building characters now, so I haven't really seen how it goes, but it's all right. No, Margin Call doesn't have Al Pacino. 21 is a blackjack movie, but it's good. It's good. Wall Street and Wall Street, and then the sequel, Money Never Sleeps, is okay. They're all right. The OG Wall Street's good. American Psycho, yeah. All right, guys. Hey, Meta at 115s. Q is at 278s. Wolf of Wall Street's all right. It's good. I find the Wolf of Wall Street very, very ironic, and I'll tell you why. Okay, the Wolf of Wall Street is ironic because of this. Okay, Leo DiCaprio comes out and says that he absolutely hates people like Jordan Belfort. That he absolutely hates Jordan Belfort or people like him. He thinks people like him ruin the world, and that the world would be a better place without people like Jordan Belfort. And like I can understand that opinion. I really can. But the problem is that entire movie glorified people like Jordan Belfort. You know what I mean? Like you watch that movie, what do you want to do? You want to be like that guy. You know what I mean? At least most people do. Most young people do. Like you show that movie to an 18-year-old kid, that's going to motivate an 18-year-old kid to hustle, is what it's going to do. It's counterproductive to what Leonardo DiCaprio said he wanted. You know, said that he agreed with. And so Leo's like, oh, yeah, people like Jordan Belfort are bad. but let me create a bunch of Jordan Belfort clones by putting out Wolf of Wall Street, which is essentially what it did. You know, if they didn't want to be like that beforehand, you got a lot of people that want, and I'm not saying I do, you know, but you got a lot of people that want to mimic that behavior, you know, because they make it look fun. They make it look cool. I mean, that's the point. I just find that incredibly ironic, you know. Anyone know why Nvidia is going up? We can look it up. Try to figure it out. Nvidia is up after semiconductor shares. Texas Instruments released fourth quarter results that were lower than expected. So climate change, Politico purchases two high-yielding energy stocks after tech stock focus. So if we look at Nvidia here, I don't know why Nvidia is up. I really don't, you know. All right, so yeah, I don't know why this is up. If you guys know, let me know. Yeah, one maybe, bro. Yeah, and that's Wall Street Bets was born. The facts. I'm 18 now. Want that? I'm telling you, bro. Listen, it glorifies it, you know. And I'm not listen. I'm not saying I agree or disagree with it. What I'm saying is that Leonardo DiCaprio being like, "Oh, Jordan Belfort's bad." It's like, bro, you just made a bunch of clones. That movie produced more Jordan Belfort clones than Jordan Belfort could have ever wished for himself to produce. So, you know, it is what it is. Now you literally made him famous now too. Like now Jordan Belfort's a household name. Everybody knows him. He's like, now you made that guy more rich and famous, you know? And so it's just kind of ironic, I think. I mean, listen, I get it, but it's funny. At 278 for the Q, starting to bounce back a little bit here. Are we done falling from Meta is the question here. Are we done falling heading into their earnings report? Is this done crashing down here? It's at 114.50s right now, 114.50s. Hey, what's up, Daniel? Please let the market keep climbing until the Fed doesn't pivot next week, and I'll cash large on SPX puts. Hey, good luck. If you want to make money on earnings, just be short on big names. I wish it was that easy, bro. How much should I expect if I bought a Meta 117 put, 1028 expiry right before close? Well, there's a lot. I mean, you're going to be up big, depending on how many you got. But you're going to be pretty deep in. I mean, you're not going to be super deep in the money. But you've got until Friday until that thing closes, and so as long as Meta holds at least where we're at now, it'll probably rebound some, I'm guessing. But I think it'll still be worth something, even if we're at 120. You know, it depends on how what the Greeks are on that thing. But good trade. Is Meta done falling? I'm not sure. It's at 1380s. It looks like it's about to break lows again. I don't know why Nvidia is breaking highs, Johnny. Really no idea. Why do you hate political discussion so much? Because nobody wins those arguments, bro. You're not changing anybody's mind, you know. Both sides, just too much nonsense, man. Like, we can talk about market without talking about politics. Why would anybody want to talk about politics? Like, again, like people, like, it's not like I'm like some super political dude and then I stream and I'm just neutral, right? I really genuinely just dislike the whole realm of politics and try to do my best to completely stay away from it. Of course, I watch what's going on in the world. I probably know more about what's going on in the world than 80 to 90% of people out there in the world, just because of me doing this every single day and reporting the news every single day. Still, with that said, it's just not really a place for politics. I don't feel like arguing with people. People get really emotional and in their head about politics on both sides. And you know, I'd rather just stay away from it. I don't think it makes sense to talk about it. Hey, thank you, Herschel. Yeah, we're going to cover all the big ones tomorrow, bro. Tomorrow we got Amazon and Apple. We got Amazon and Apple tomorrow, the biggest companies in the world. Probably be the biggest earnings stream this week. And yeah, it starts tomorrow. We'll probably kick it off, pretty early. And yeah, y'all be ready. Again, stick around. We got the earnings call for Meta dropping in about 24 minutes to be exact. 24 minutes. Meta currently is testing lows right now. It's at 113.80s. So no, in the morning tomorrow we've got Shopify, Caterpillar, McDonald's, MasterCard, Southwest, Merck, and more. And again, we're gonna start our stream super early as we always do. We're gonna cover all these when they drop. We'll be able to watch the market reaction. Again, subscribe, team. We really do cover all this stuff, and we start our stream early, relatively speaking, early. We start our stream at like 6:15 market time. So it's like 5:15 my time over here in Texas. So we started early. We cover all the big earnings drops, and so yeah, y'all be ready. We're gonna stream that too. Meta right around lows at 114 here. So Ford beat on sales revenue, missed on EPS. Meta beat on sales revenue, missed on EPS. Oh no, Ford did better than expected. Hold on, wait. Okay, yeah, Ford did better than expected for sales revenue. Okay. I bought the dip in Ford. Oh, luckily we took profit. We still probably green in this, huh? Yeah, barely. That's all right. Again, we'll let this sit. Hey, later, Lewis. Have a good day, bro. Waiting for under 100, then entry. Hey, good luck, Nicholas. Hey, nice, Herschel. Yeah, there's just no reason for me to talk about it again, yeah. Apple and Amazon at 4 p.m. Yep. Both of them drop at 4 p.m. I think, to be exact, Apple drops at 4:30 actually. So Apple's a little bit late in their drop. Amazon drops right at 4. Intel drops at 4 as well. Pinterest drops at 4. US Steel drops at 4:15. T-Mobile drops at 4. Gilead drops at 4. First Solar drops at 4. Capital One Financial drops at 4:05. We got Pioneer, we got Deckers, Southwest Energy, Dexcom, Zendesk. So yeah, but the big ones tomorrow: Apple, Amazon, Intel, Pinterest, T-Mobile, US Steel, Gilead, First Solar, Capital One. And those are the tomorrow evening. And then tomorrow morning, we've got Shopify, Caterpillar, McDonald's, MasterCard, Southwest, Merck, and a bunch of other ones. So tomorrow is probably the biggest earnings day this entire earnings season. Is tomorrow. Tomorrow is the biggest earning day this entire earnings season. Tomorrow's results in earnings are going to be incredibly influential over price action. Incredibly influential. So Apple, Amazon, behemoth companies, incredibly influential, and it's something that the whole stock market's going to be paying attention to. And again, we will stream it. Let me know what you guys are seeing today. Your view on Bitcoin ETH pump? What do you think? It's a trend reversal or fake out? I really don't know about short-term Bitcoin price action. I think it could be either one. I mean, I'm really not sure. I think it could be either one. Long term, I think it's good that Bitcoin's consolidating where it is, and it hasn't really broken down majorly from any of that. And so I think long term, as long as it can continue to hold, I think it'll probably start moving up sometime over the next 3 to 4 months. But again, I'm not sure. We'll see. Time will tell. All right, we're at 114.30s for Meta, testing lows again. Again, the low is 113.50s. We're at 114.40s. Very, very volatile, but kind of pivoting back and forth between these levels here. And so again, very, very volatile, but pivoting back and forth. We got the SPY at 382.70s here. Again, we'll see if Meta breaks. It might. Yeah, 4 p.m. 4 p.m. Eastern Standard Time, Octavius. All the earnings drop at 4 p.m. if they're in the evening. It's 4 p.m. is when they come out. Always Eastern Standard Time. When I say market time, it's always Eastern Standard Time. All right, guys, 18 minutes. 18 minutes until earnings call. All right, guys. Again, we're consolidating. We're at 1390s, guys. 11390s. Again, the low of the day is at 11350. So if we break underneath 11350s, again, we might get some big downward pressure coming in. All right, we're at 1375s, guys. All right, guys, 113.75, 113.50. So we are about 20 cents away from the low of the day for Facebook and Meta. We're pretty close here. We're pretty close to the low of the day. All right, so we just broke lows of the day. We're at 113.17. Just broke lows of the day here, guys. All right, guys, down to 113.30s, 113.50s here. All right, 113.45s. All right, we're at 113.40s here, guys. One 13.30s here. SPY's actually moving up with this, which I'm surprised. Anybody have any other? I mean, the only thing I could think of here. The only thing I can think of is maybe Nvidia moving up is dragging the rest of the market up to where it's not breaking the SPY down heavily here. But again, we are moving up a little bit. The earnings calls in about 13 minutes. Again, still consolidating at 112.50 is the new low here, which is kind of shocking, man. So a lot of weakness coming through. Hmm. 112.90s here, so we'll see if we bounce back a little bit. Again, we're starting to move up a little bit on the SPY even more here, which is very strange as the market is breaking down. The SPY is moving up about 12 minutes before the actual earnings call goes live. Yeah, NVIDIA dragging the market up must be what this is. Again, here's NVIDIA up to 113s. I don't know if it's going to change the trend, Chef. It could, might not. Might be a dip in tomorrow. Rip, I'm not sure. Semiconductors are moving up. So, yeah, we got Intel here. Green on the day. Apple getting somewhat affected by this. AMC. Let's look at Amazon. Amazon moving up a little bit as well. So Amazon's moving up. So again, we saw some reactions in tech, but it wasn't a big reaction. So the earnings call is starting in 12 minutes. We're going to stream the earnings call, Mark. Is essentially what we're going to get. So again, the earnings call is in 12 minutes. We're going to stream the full earnings call so you guys can watch it or listen to it essentially. So. All right, guys, but still break it down. Amazon's still ripping up here. I think we got to look at NVIDIA. We got 10 minutes before the earnings call starts. There's NVIDIA at 133.90s. SPY started to creep up. It's at 383s here. So, I mean, hey, looks like the market is trying to come back. At 112.75s here for Meta. Again, the earnings call starts in about 10 minutes, 9 minutes to be exact. One 12.75s. Up to 383.20s here, 383.20s. All right, market's rebounding big, 112.90s here. And again, let me know if you think Chart Prime is going to rebound back here. I think it could, but it might not. Um, One 112.80s, guys. Again, we got about 3 minutes, or I mean, about 8 minutes. I'm sorry. Spies is ripping up. So we are now under the previous low of the day here. So we are now under the previous low of the day. And again, we'll see if we actually hold underneath that level. I mean, I think it's a relevant level that we should pay attention to. Again, still down to 112.60s. The low of the day now on Meta is 112.50s right now, guys. We got 6 minutes. Again, the earnings call starts in about 6 minutes. Y'all be ready. Something doesn't make sense overall. The market is moving up. Can't just be from NVIDIA and AMD. I mean, we can look at what sectors are hinting here. Maybe there's a hint that GDP data will be decent. Super long consolidation on the dollar index. Well, yeah, I mean, this could be. Let's see what the dollar is doing. All right, so the dollar isn't really moving, which might be why, the market's not moving and it's just kind of reserved to just Meta here. Again, but the dollar index is not really moving a ton. Meta's still breaking down. Meta just broke lows of the day down to 112.20s at the lows here, 6 minutes before the actual earnings call starts. 6 minutes, guys. All right, guys, SPY pulling back a little bit as the meta is breaking down. So it is reacting to a certain extent from this. It's down to 111.80s, man. Facebook's getting hammered here. Again, so getting some weakness roll through, some really obvious weakness and everything. Man, 112 or 111.75s here, man. Wow. Sheesh. All right, guys, 111.90s, 111.64s is the new low of the day. 4 minutes, guys, 4 minutes. Again, we're getting ready for the earnings call to actually start. Again, look at the SPY rip up even more at 383.30s as Meta is breaking down more, which is kind of strange. Now we're going to mute the music. Y'all could hear the music prior to this, though, correct? So prior to this, you could hear the music, right? Sorry, the earnings call. Okay, but barely. Okay, I got you. We're gonna do a sound check once we get it live and going here, so don't worry. Mm. All right, guys. 1:12:01. So you got about less than 2 minutes here, too. Less than 2 minutes. All right, team. Less than a minute here, guys. Less than a minute before the actual earnings call starts. Y'all be ready. Again, less than a minute. Bear with me. We gotta wait for it. Usually, it starts maybe an hour or maybe a minute later than normal. So, again, it should be starting pretty soon. All right, so there it goes. Let's see if it started here. Bear with me. Nothing yet. All right, we're getting everything ready. All right, guys, sitting here waiting here. They still got the hold music playing. Nothing started yet. Again, we'll let you guys know. We're at 112s right now for Meta 112s. Market pulling back a little bit here. Still waiting for the earnings call to start. Dollar gap it up. Yeah, dollar's going to be moving up. Yeah, we should be starting pretty soon here, I think. Man, they got some terrible, terrible hold music. Oh my gosh, bro. Turn this off, dude. Ugh. Play the freaking earnings call. What are y'all late today? I'm sorry, guys. Y'all are just all I'm saying is like, listen, y'all are happy y'all don't hear what I'm hearing right now. It's like cartoon music. All right. Patiently waiting here, team. All right, I think they're about to start. Okay, they still haven't started yet. I don't know what the heck they're doing. Sorry, guys, still waiting. Now we're down to 111.20 here on Meta. Still breaking down as everything happens. All right. All right, please be ready. I gotta refresh this to make sure I'm not missing it, which I'm not. Okay, so yeah, it still literally hasn't started yet. No idea why it's taking so long. Again, patiently waiting. Earnings call should be live right now. There we go. It's just not starting. Okay. We're gonna do a sound check. They're starting right now.
And I will be your conference operator
Sound
today.
check.
At this time, I would like to welcome everyone to the Meta third quarter earnings conference call. All lines have been
Check.
placed on mute to prevent any background noise. After the
Is this too
speaker's
loud?
remarks,
Let me know if
there
this
will
is
be a
too loud.
question and answer session. If you would like to ask a question, please press the 1, then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ms.
Good.
Deborah Crawford, Meta's Vice
Afternoon and welcome to Meta Platforms' third quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Dave Wehner, CFO. Susan Li, VP of Finance, and our incoming CFO, and Marnie Levine, Chief Business Officer, are also on the call and will join Mark and Dave for the Q&A portion. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Hey everyone, thanks for joining today. Our community continued to grow this quarter. We now reach more than 3.7 billion people monthly across our family of apps. And while we continue to navigate some challenging dynamics, volatile macroeconomy, increasing competition, ad signal loss, and growing costs from our long-term investments, I have to say that our product trends look better from what I see than some of the commentary I've seen suggests. There's been a bunch of speculation about engagement on our apps, and what we're seeing is more positive. On Facebook specifically, the number of people using the service each day is the highest it's ever been, nearly 2 billion, and engagement trends are strong. Instagram has more than 2 billion monthly actives. WhatsApp has more than 2 billion daily actives, also with the exciting trend that North America is now our fastest growing region. Across the family, some apps may be saturated in some countries or some demographics, but overall, our apps continue to grow from a large base. We're also seeing engagement grow, especially strong growth in Reels, and I'll share more details about that when I discuss our product priorities shortly. In terms of our business, total revenue grew slightly this quarter on a constant currency basis. We're still behind where I think we should be, but we believe that we will return to healthier revenue growth trends next year. That said, it's not clear that the economy has stabilized yet, so we're planning our budget somewhat more conservatively. In 2023, we're going to focus our investments on a small number of high-priority growth areas. So that means that some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. In aggregate, we expect to end 2023 as either roughly the same size or even a slightly smaller organization than we are today. Three of the primary areas we're going to focus on are our AI discovery engine that's powering Reels and other recommendation experiences, our ads and business messaging platforms, and our future vision for the metaverse. The internal indications I've seen suggest we're doing leading work and are on the right track with these investments. So I think that we should keep investing heavily in these areas. As I've shared before, our goal is to grow Family of Apps operating income such that even with our AI infrastructure and Reality Labs investments, we can still meaningfully grow our overall company operating income in the long term. Our current surge in CapEx is largely due to building out our AI infrastructure, and we would expect CapEx to come down as a percent of revenue over the long term. We expect Reality Labs expenses will increase meaningfully again in 2023, with the biggest drivers of that being the launch of the next generation of our consumer Quest headset and hiring that has been done in 2022, but for which we're going to be paying the first full year of salaries next year. More broadly, beyond 2023, we expect to pace Reality Labs investments to ensure that we can achieve our goal of growing overall company operating income. Our capital allocation philosophy over the long term is to allocate a portion of the profits generated from the Family of Apps towards these future-focused areas, while enabling a greater return of capital to shareholders. All right, now I'd like to share some updates on the progress that we're seeing in these product areas. Our AI discovery engine is playing an increasingly important role across our products, especially as advances enable us to recommend more interesting content from across our networks and feeds that used to be primarily driven just by the people and accounts you follow. So this, of course, includes Reels, which continues to grow quickly across our apps, both in production and consumption. There are now more than 140 billion Reels plays across Facebook and Instagram each day. That's a 50% increase from 6 months ago. Reels is incremental to time spent on our apps. The trends look good here, and we believe that we're gaining time spent share on competitors like TikTok. Over time, I expect a few things to set our products apart here. First is that our discovery engine work allows us to recommend all types of content beyond Reels as well, including photos, text, links, communities, short and long form videos, and more. Second is that we can mix this content alongside posts from your family and friends, which can't be generated by AI alone. And third, as more social interactions move to messaging, we're developing a flywheel between discovery and messaging that are going to make these apps stronger. On Instagram alone, people already reshare Reels 1 billion times a day through DMs. Moving to monetization, I've discussed in the past how the growth of short-form video creates near-term challenges, since Reels doesn't monetize at the rate of feed or stories yet. That means that as Reels grows, we're displacing revenue from higher monetizing surfaces. I think this is clearly the right thing to do, so that way Reels can grow with the demand that we're seeing. But closing this gap is also a high priority. Even with the progress we've made, we're still choosing to take a more than $500 million quarterly revenue headwind with this shift, but we expect to get to a more neutral place over the next 12 to 18 months. I mentioned last quarter that Instagram Reels had crossed a $1 billion annual revenue run rate. We continue scaling monetization across both Instagram and Facebook, and the combined run rate across these apps is now $3 billion. Beyond Reels, messaging is another major monetization opportunity. Billions of people and millions of businesses use WhatsApp and Messenger every day, and we're confident that we can connect them in ways that create valuable experiences. We started with click-to-messaging ads, which lets businesses run ads on Facebook and Instagram that start a thread on Messenger, WhatsApp, or Instagram Direct, so they can communicate with customers directly. And this is one of our fastest growing ads products with a $9 billion annual run rate. And this revenue is mostly on Click to Messenger today, since we started there first, but Click to WhatsApp just passed a $1.5 billion run rate and growing more than 80% year over year. Paid messaging is another opportunity that we're starting to tap into, and it continues to grow quickly, but from a smaller base. We're putting the foundation in place now to scale this with key partnerships like Salesforce, which lets all businesses on their platform use WhatsApp as the main messaging service to answer customer questions, send updates, and sell directly in chat. And we also launched JioMart on WhatsApp in India, and it's our first end-to-end shopping experience that shows the potential for chat-based commerce through messaging. So between click-to-messaging and paid messaging, I'm confident that this is going to be a big opportunity. The last area that I want to discuss today is the metaverse. We just had our Connect conference and announced Quest Pro, which we just started shipping. It's our new high-end VR headset that delivers high-resolution mixed reality, so you can blend virtual objects into the physical environment around you. It's pretty amazing when you see it, and it's going to enable all kinds of new experiences and socializing, gaming, fitness, and work. And I'm really looking forward to seeing what people build with this new capability. Work in the metaverse is a big theme for Quest Pro. There are 200 million people who get new PCs every year, mostly for work. And our goal for the Quest Pro line over the next several years is to enable more and more of these people to get their work done in virtual and mixed reality, eventually even better than they could on PCs. And to deliver a great work and productivity experience, I'm excited about the partnerships that we announced with Microsoft bringing their suite of productivity and enterprise management services to Quest, Adobe and Autodesk bringing their creative tools, Zoom bringing their communication platform, Accenture building solutions for enterprises, and more. There's still a long road ahead to build the next computing platform, but we are clearly doing leading work here. This is a massive undertaking, and it's often going to take a few versions of each product before they become mainstream. But I think that our work here is going to be of historic importance and create the foundation for an entirely new way that we will interact with each other and blend technology into our lives, as well as the foundation for the long term of our business. So between the AI discovery engine, our ads and business messaging platforms, and our future vision for the metaverse, those are three of the areas that we're focused on. I believe that the tougher prioritization, discipline, and efficiency that we are driving across the organization will help us navigate the current environment and emerge an even stronger company. As always, I'm grateful to everyone at Meta for your hard work and to all of you for being on this journey with us. And with that, I'm going to turn it over to Dave.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q3 total revenue was $27.7 billion, down 4% or up 2% on a constant currency basis. Had foreign exchange rates remained constant with Q3 of last year, total revenue would have been approximately $1.8 billion higher. Q3 total expenses were $22.1 billion, up 19% compared to last year. This includes a $413 million impairment of certain operating leases as part of our ongoing work to align our office facilities footprint with our anticipated operating needs. In terms of the specific line items, cost of revenue decreased 1% as a reduction in Reality Labs hardware costs was offset by growth in infrastructure and content-related expenses. R&D increased 45%, mainly driven by hiring within our family of apps and Reality Labs segments, as well as Reality Labs technology development costs. Lastly, marketing and sales and G&A increased 6% and 15% respectively, mainly driven by headcount-related costs. Our pace of hiring slowed in the third quarter, consistent with our previously stated plans. We added 3,700 net new hires in Q3, down from our Q2 net additions of 5,700, despite Q3 typically being a seasonally stronger hiring period. We expect hiring to slow dramatically going forward and to hold headcount roughly flat next year relative to current levels, which I will cover in my outlook section. Third quarter operating income was $5.7 billion, representing a 20% operating margin. Our tax rate was 21%. Net income was $4.4 billion, or $1.64 per share. Capital expenditures, including principal payments on finance leases, were $9.5 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $173 million. We repurchased $6.5 billion of our Class A common stock in the third quarter and completed an inaugural debt offering of $10 billion. We ended the quarter with $41.8 billion in cash and marketable securities. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 2.9 billion people used at least one of our family of apps on a daily basis in September, and that approximately 3.7 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. Facebook daily active users were 1.98 billion, up 3% or 54 million compared to last year. DAUs represented approximately 67% of the 2.96 billion monthly active users in September. MAUs grew 48 million or 2% compared to last year. Q3 total family of apps revenue was $27.4 billion, down 4%. Q3 family of apps ad revenue was $27.2 billion, down 4%, but up 3% on a constant currency basis. Consistent with our expectations, the headwind to year-over-year growth from Apple's ATT changes diminished in Q3 as we lapped the first full quarter post the launch of iOS 14.5. However, this was offset by weak advertising demand, which we believe continues to be impacted by the uncertain and volatile macroeconomic landscape. As a result, our Q3 constant currency growth rate was in line with our Q2 rate. The healthcare and travel verticals were the largest positive contributors to growth in Q3. However, this was offset by continued softness in other verticals, including online commerce, gaming, financial services, and CPG. On an advertiser-sized basis, revenue growth from large advertisers remains challenged, while we've seen more resilience among smaller advertisers. Foreign currency was a significant headwind to advertising revenue growth in all international regions. On a user geography basis, year-over-year ad revenue growth was strongest in Asia Pacific and rest of world at 6% and 3% respectively, with both regions continuing to benefit meaningfully from strong growth in click-to-messaging ads. North America and Europe declined 3% and 16% respectively. In Q3, the total number of ad impressions served across our services increased 17%, and the average price per ad decreased 18%. Impression growth was driven by Asia Pacific and rest of world. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing services and regions, foreign currency depreciation, and lower advertiser demand. Family of apps other revenue was $192 million, up 9%, driven by strong business messaging growth from our WhatsApp business platform, partially offset by a decline in other line items. We continue to direct the majority of our investments towards the development and operation of our family of apps. In Q3, family of apps expenses were $18.1 billion, representing 82% of our overall expenses. FOA expenses grew 18%, driven mostly by employee-related costs, infrastructure-related costs, and the impairment of certain operating leases for office facilities that we plan to exit. Family of apps operating income was $9.3 billion, representing a 34% operating margin. Within our Reality Labs segment, Q3 revenue was $285 million, down 49% due to lower Quest 2 sales. Reality Labs expenses were $4 billion, up 24%, due primarily to employee-related costs and technology development expenses. Reality Labs operating loss was $3.7 billion. Turning now to the outlook. We expect fourth quarter total revenue to be in the range of $30 to $32.5 billion. Our guidance assumes foreign currency will be an approximately 7% headwind to year-over-year total revenue growth in the fourth quarter based on current exchange rates. Before turning to the expense outlook, I wanted to provide some context on the approach we are taking towards setting our 2023 budget. We are making significant changes across the board to operate more efficiently. We are holding some teams flat in terms of headcount, shrinking others, and investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with third quarter 2022 levels. We've increased scrutiny on all areas of operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Some steps, like the ongoing rationalization of our office footprint, will lead to incremental costs in the near term. This should set us up well for future years when we expect to return to higher rates of revenue growth. Turning now to the specific expense outlook for 22 and 23. We expect 2022 total expenses to be in the range of $85 to $87 billion, updated from our prior outlook of $85 to $88 billion. This includes an estimated $900 million in additional charges in Q4 related to consolidating our office facilities footprint that we expect to record in the fourth quarter of 2022. We anticipate our full year 2023 total expenses will be in the range of $96 to $101 billion. This includes an estimated $2 billion in charges related to consolidating our office facilities footprint. We expect the slight majority of our 2023 expense dollar growth to be driven by operating expenses, with the remaining growth coming from cost of revenue. We expect the percentage growth rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount related expense growth and keep 2023 headcount roughly flat with current levels. Conversely, our growth in cost of revenue is expected to accelerate, driven by infrastructure-related expenses and, to a lesser extent, Reality Labs hardware costs, driven by the launch of our next generation of our Consumer Quest headset later next year. Reality Labs expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run. Before turning to our CapEx outlook, I'd like to provide some context on our infrastructure investment approach. We are currently going through an investment cycle, which is primarily driven by two large areas of investment. First, we are significantly expanding our AI capacity. These investments are driving substantially all of our capital expenditure growth in 2023. There's some increased capital intensity that comes with moving more of our infrastructure to AI. It requires more expensive servers and networking equipment, and we are building new data centers specifically equipped to support next generation AI hardware. We expect these investments to provide us a technology advantage and unlock meaningful improvements across many of our key initiatives, including Feed, Reels, and Ads. We are carefully evaluating the return we achieve from these investments, which will inform the scale of our AI investment beyond 2023. Second, we are making ongoing investments in our data center footprint. In recent years, we have stepped up our investment in bringing more data center capacity online, and that work is ongoing in 2023. We believe the additional data center capacity will provide us greater flexibility with the types of servers we purchase and allow us to use them for longer, which we expect to generate greater cost efficiencies over time. These investments, along with revenue headwinds, are contributing to higher capital expenditures as a percentage of revenue in 2022 and 2023 than we expect over the long term. Turning now to the specific CapEx outlook for 22 and 23. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of $32 to $33 billion, updated from our prior range of $30 to $34 billion. For 2023, we expect capital expenditures to be in the range of $34 to $39 billion, driven by our investments in data center, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our capital expenditure growth in 2023. Turning to tax. Absent any changes to U.S. tax law, we expect our fourth quarter 2022 and our full year 2023 tax rate to be similar to the third quarter 2022 rate. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, we are pleased with the growth of the community using our family of apps and the engagement improvements we are driving with efforts such as Reels and our AI-powered content recommendations. While we are facing near-term headwinds on revenue, the fundamentals are there for a return to stronger top-line growth. We are approaching 2023 with a focus on efficiency and spending discipline, and I'm optimistic that these moves will set us up well to achieve our goal of driving operating income growth over the long term while investing for future growth. On a personal note, I'll be closing out a decade at Meta in the next couple of weeks, including the last 8 years as CFO. In my new role, I'm looking forward to continuing to help the company achieve its long-term mission and execute on its financial plan. I couldn't be happier to hand off the CFO role to Susan Li, who is one of the most talented executives that I've had a chance to work with in my long career in finance and tech. And with that, Martin, let me open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Novak with Morgan Stanley.
Thanks for taking my questions. If I could squeeze in two. The first one just on CapEx and return on invested capital. The CapEx spend and forward expectations are remaining somewhat higher than investors expected. So, Mark, can you maybe just give us some examples of what these new AI investments are going to enable you to do differently going forward than in the past? And what's a reasonable period in which investors should expect to see material incremental engagement or revenue from these? And then the second one is on engagement. I thought your comments about incremental time spent from Reels were interesting, but maybe just to sort of address the big topic around time spent, can you give us any update on what U.S. time spent trends look like, just to sort of give investors some incremental confidence in the durability of the platform in your oldest market? Thanks.
Hey, Brian, why don't I take the time spent question first, and then I'll hand it off to Susan on the CapEx question. So on time spent, we are really pleased with what we're seeing on engagement. And as Mark mentioned, Reels is incremental to time spent. Specifically, in terms of aggregate time spent on Instagram and Facebook, both are up year over year and in both the US and globally. So while we're not specifically optimizing for time spent, those trends are positive. And we aren't specifically optimizing for time spent, as that would tend to tilt us towards longer form video, and we're actually focused more on, short form and other types of content. So just some color on time spent. And Susan, you want to take the CapEx question?
Yes, thanks, Brian. So as Dave mentioned in his script, we expect 2023 CapEx to be in the range of 34 to 39 billion, with our investments in AI driving all of that growth. We're very focused on evaluating the ROI of our AI investments, and that'll inform our level of future spend. But so far, we've seen continued strong impact on our recommendations products from advancing developments in our AI work. In the Q2 call, we had shared that a single AI advancement in scaling our recommendations models had led to a 15% watch time gain for Facebook Reels, and that gain has continued to grow, and we expect that there will be additional watch time improvements coming from that work. On the ad side, we're also continuing to roll out more AI and ML improvements in some of the new ads offerings, and we're encouraged by all of the early examples that we've seen. So this is something that we'll be watching very closely. We think we're early in this journey, but our level of CapEx investment will depend on the returns that we generate through these investments in AI. And if we generate significant engagement and revenue gains, we'll continue investing here. And if we don't, we'll pace our spending accordingly.
Your next question comes from the line of Mark Shmulik with Bernstein.
Yes, hi. Thanks for taking my question. A couple if I may. Mark, the first one, you kind of mentioned in your opening remarks that you expect, to get back to kind of revenue growth in 2023. Any color you can share on kind of the key drivers behind that and how much of that is, macro-driven versus some of these initiatives that you guys are working on. And then secondly, for Susan, as we think about kind of, the operating expense guidance, into 2023, I know historically, those numbers have tended to skew a bit conservative. How much conservatism is baked in there, and how much flexibility is there to kind of, toggle some of those expenses depending on the health of core? Thank you.
So, Mark, it's Dave. I'll take the first question. Obviously, we're continuing to see, significant, macro headwinds in the business. We do think there's a big cyclical factor here, so some of it is just going to depend on the broader economy and recovery that we see. But we're continuing to make progress in a number of areas in terms of growth. And Mark cited one of those, which is click-to-messaging ads, which has been a solid grower. It's a $9 billion revenue run rate today, and we're continuing to make good progress on click-to-messaging ads as a driver. That's especially been important in some of the developing markets. And overall, we're focusing on a number of areas to grow revenue as we get through this tough cycle. And we're seeing progress on a number of fronts, but it's going to depend to some extent on what the overall macro climate is like. We're not going to be facing as significant headwinds next year from the signals point of view, as we are now lapping the big changes that were made on on the iOS platform. So that's going to also not factor in as strongly in our growth rates next year.
And I'll take that second question on next year's OpEx guide. One thing I'd point out first is just next year's guide includes an estimated $2 billion in 2023 expenses that are one-time charges as part of our office facilities consolidation as we continue to rationalize our real estate footprint. We also expect a little over half of our expense dollar growth in 2023 to come from OpEx, with the rest coming from cost of revenue. On the OpEx side, the growth in 2023 OpEx is primarily driven by headcount-related costs from employees that we've already hired through 2022, and those hires have primarily been concentrated in technical and more senior roles. So we expect, the slowdown in payroll growth in 2023 will be the result of the slowdown in headcount growth overall. As we mentioned, we expect to end 2023, with headcount roughly flat to where we are now. And on the cost of revenue side, we expect, the growth rate of cost of revenue to accelerate in 23, driven by the increased depreciation that we're seeing play through from the big CapEx investments that, we've made so far. And then as well as from Reality Labs with the launch of the next generation of the Consumer Quest headset later next year.
Your next question comes from the line of Justin Post with Bank of America.
Great. A couple questions on the Reels transition. When you think about that business and people coming to the site, do you think, how does it compare to the news feed as far as repeat rates or retention? And are you a little worried that it's a little less proprietary than your prior content? And then second, I think there are a lot of questions on CapEx. Just wondering if the build here for this year and next is one time to kind of get your capabilities in place, and then maybe you can go back to kind of a mid-teens level as a percentage of revenue, or is just the transition in the business just a higher capital intensity business? Thank you.
So, Justin, on the Reels transition, as Mark noted, it is incremental to time spent. So we are seeing a benefit from Reels to contributing to overall engagement on the platform. And it's, contributing to healthy engagement dynamics. And I'd say that coupled with our recommendation engine, which is also, increasing engagement on the platform, are both promising trends on the engagement front. From a monetization perspective, we are still working to close the gap between Reels and Feeds and Stories, but it's going to take, time before Reels becomes a tailwind to revenue. As Mark mentioned, we're on about a $3 billion run rate today, but Reels was still, negative overall to revenue by about $500 million in the quarter. So, we expect that it should be a tailwind to the business eventually, and we're sort of saying that's probably in the 12 to 18 month time frame. But overall, we're pleased with the impact that Reels has on the business, specifically on the engagement front.
And on your second question about the CapEx guide, I would really think about our CapEx investment as kind of the AI and non-AI components. On the AI side, which really is driving all of the CapEx growth in 2023, we will be pacing that future investment on the basis of the returns that we're able to see and measure. So frankly, we're hopeful that there will be a big opportunity to invest more here because we expect that this will be a high ROI area of investment for us. On the non-AI side, a lot of that spend is in ongoing investments on our data center footprint, where we had stepped up our investment in recent years to build sort of ahead of our anticipated capacity needs, and that work continues in 2023. We do expect this component of our CapEx spend to become more efficient over time, and we're actively looking for more efficiencies there. So I don't know that we are benchmarking to an exact number on the combination of those two things. The future intensity, I think, is going to depend on the returns that we generate through those increased AI investments.
Yeah, and maybe I'll just add some color on how I'm seeing this too, just because the Reels and Discovery Engine work is such a big part of what we're spending our time and energy on right now. I think that there are two comparisons to the things that we've done in the past year that are worth anchoring on. For Reels monetization specifically, anytime we've had a new format, like when we added stories, or even before that when we were primarily on desktop and we shifted to mobile feed, we sort of had this dynamic where we focused on increasing engagement and growing demand for the product. But while that was happening, monetization efficiency for the new format lagged behind kind of the news feed or mobile news feed compared to stories for some period while that was ramping up. And while it's really hard for us to answer questions now that are like, what is the eventual monetization efficiency going to be? It's really hard to predict that in advance. What I can say is that I think on stories, we've ended up achieving something that was way greater than what we even hoped to achieve at the time, right? In terms of where we thought that stories could net out. And a lot of the progress that we've been making on Reels monetization so far has been at a clip that we've been pretty happy with. So, obviously we want to close the monetization gap as quickly as possible. We want this to be a tailwind, not a headwind. I think we're going to get there. But I think we've gone through a few of these transitions, and I think that'll just take some time. On the engagement side, in terms of how incremental this is, the basic way to think about this is you have a set amount of inventory across the system. There's content from family and friends, which is quite differentiated and valuable, and accounts that you follow. But now there's this whole larger corpus that we can use AI to effectively understand what the content means and understand individually what you might be interested in, and just have access to a much bigger corpus of content to put into your feeds and increase engagement. And we're seeing that start to work already and be incremental in terms of having more people use the services, having them spend more time, having them spend, just engage more in feeds overall. So that part of things we think is going well. We think we should be able to continue driving results. Some of the results already have been due to some of the AI investments and infrastructure that we've made. If our bets are correct, then the AI CapEx that we're bringing online should be able to drive incremental engagement. That's pretty meaningful there. But we think qualitatively that investment makes just a lot of sense given the direction that the world seems to be going in. And I do think that our somewhat unique mix of both having the kind of social friends and family content and the ability to drive recommendations, which I agree with some, the premise of the question there, and that creators do want their content to be on multiple platforms, which I think is a little bit different from friends content where you want to, for the most part, share where your friends are and you're not trying to have it be everywhere. I think we should be able to do pretty well on both of those, and that should grow over time. But it's hard for us to be more specific than that now. But I do think that these trends, I mean, I get that this takes a little longer to play out than you would want, but we've been through a couple of these cycles before already, and I'm pretty confident that this is going in a good direction.
Your next question comes from the line of Doug Anmuth with JP Morgan.
Thanks for taking the questions. I have two. Dave, you talked about the ATT impact diminishing in 3Q just as you lap the rollout. Curious if you're seeing any meaningful improvements around ATT, or is this just a function of the year-over-year comp dynamic? And then second, can you just talk about your efforts to attract content creators to Reels, and does revenue sharing impact your margin structure versus the current ad formats and surfaces? Thanks.
So in terms of ATT impact, we're the primary factor is the lapping factor relative to Q2. So in Q2 of 2021, ATT had not been fully rolled out. It was, largely rolled out by Q3 of 21. So the fact that we were lapping that period in the third quarter, we got a benefit relative to the second quarter, but that was offset by continued macro weakness. In terms of the efforts to attract content creators, and specifically as it relates to the overall cost structure, we don't anticipate that that's going to have a meaningful impact to the cost structure, and obviously it's factored into our expense guidance.
Hey, your next question comes from the line of Eric Sheridan with Goldman Sachs.
Thanks for taking the questions. Maybe two, if I can. Mark, I would love for you to weigh in. Obviously, the company has faced a lot of headwinds from platform changes, competitive dynamics, and broader macro impacts, as we've talked about over the last 12 to 24 months. How much of this investment cycle is informed by your views around future-proofing the platform so there are less externalities that can impact it, and you're in control more of your own destiny versus elements of curveballs that can be thrown at you that can cause volatility in the business in the medium to long term? And then I'd love to ask one on the metaverse. You know, understood on the investment cadence for the metaverse for the next 2 years. Even if qualitatively, how should investors think about the revenue opportunity over the next 3 to 5 years, split between the hardware opportunity and the non-hardware opportunity as you see it, as the metaverse evolves?
Sure. I can take the first one, and then I guess I could take the second one too. So the first question was, what was this?
How much of the
Yeah, right. Okay. So I think that that's a factor, but it's not the primary thing that's driving it. So on the business side, I think certainly you see dynamics like what Apple has done with ATT and you know continues to do in some ways with you know the policy that they announced yesterday, which are obviously big risks and we see as issues. But there are also other things that like we just believe that and we've invested so much in measurement over time because since our ads help people higher up in the funnel than search ads, for example, we think that often less of the value of sales is attributed to us than should be. So for all these reasons, having a funnel that's more integrated where we do more commerce internally, this is a big part of what we hope to achieve with business messaging and you know, the fact that you can find a customer, you know, have a thread directly with them in a business chat, and be able to sell a product directly, or to be able to do customer support and then help people out with a product, and then maybe sell them something else. That kind of integration, I think, is going to be valuable very broadly in terms of making sure that the value that we're creating for businesses and consumers can be more efficiently measured and attributed to our services. A lot of this, though, is it's not just about you know, fortifying against outside threats. A lot of this is just you can build new and innovative things by when you control more of the stack yourself. So I mean, in the metaverse sense, you know, a lot of the things that we're trying to enable, right? This feeling of presence, which in a lot of ways is sort of the ultimate social experience. You know, when you do it physically, or eventually, you know, when as you're doing it virtually, you know, being able to design the hardware so that way you can have sensors that can help map your facial expressions and emotions to the avatar that you have virtually, I think is going to be just a very profound experience, and you can start to experience that with Quest Pro, which is out now. And it's just not clear if we weren't driving this forward that anyone else would be. So I think that sort of integration and innovation is really helpful. Similarly, I think the fact that we can create a lot of the business and commerce platform around our messaging platform products, but then link to them from Facebook and Instagram, creates some unique experiences that I think would be very hard to create otherwise as well. Just in terms of having that kind of full loop in the product. So I think that like enabling more experiences, I think, is really the primary driver, and then the sort of fortification against external risks is certainly a strategic advantage over the long term, but probably not the only reason why we're doing this.
Your next question comes from the line of Youssef Squali with Truist.
Great, thank you very much. Maybe one question for Dave or Susan, and then one for Mark. What kind of base case assumptions for macro are you guys baking in for 2023 with against that 12 to 15% increase in OpEx and CapEx guide? And can you talk about maybe the fixed versus variable component in the expense guide that could give you the flexibility to address any material macro changes next year? And Mark, relative to your own expectations when you decided to pursue the metaverse strategy a couple years ago, how would you rate the company's performance to date in terms of product rollout, engagement with things like Horizon Worlds, et cetera? And is the opportunity evolving, in line with your expectations? And if not, what are the key gating factors? Thank you.
Hi, it's Susan on the first question. We haven't given revenue guidance yet for 2023, but our Q4 2022 guide is a range, and that range certainly encompasses, I think, a wide variety of macro expectations. We're certainly in a period right now where we are seeing a slowdown in advertising demand, and that correlates with a lot of things that we're seeing outside of just our sector here, including rising inflation and supply chain issues sort of more broadly across the economy. So, with that in mind, we have undertaken a 2023 budget process that has applied higher scrutiny to, almost all of the areas of our very broad investment portfolio. And we have taken what is an intentionally more conservative approach to our budget and our anticipated growth. You asked about the sort of fixed versus variable components of the 2023 OpEx guide. I think I'd mentioned that, a little over half of that is coming from OpEx, the rest from cost of revenue. So the cost of revenue piece, that has the sort of the growth and depreciation, which is certainly fixed and, is just playing through from prior year CapEx growth. Part of that is coming from Reality Labs and the launch of the next gen consumer Quest headset. So that sort of corresponds to the product launch. And then on the OpEx side, a lot of the growth in 2023 OpEx is coming from employees who we've already hired. We expect that we're gonna, have the same number of employees, end of 2023. So that's an area where, we're pretty focused on being disciplined also. And then finally, I'd just mention again, there's that $2 billion office facilities consolidation charge that's also included in the 23 OpEx guide.
Sure. And in terms of the metaverse efforts and kind of how we're doing compared to what I expected, it's a pretty wide portfolio of things that we're working on, which I think is important to internalize, because what I think most people see are the VR headsets, right? Because that's sort of the first thing that we launched. Quest 2 is the first mainstream VR headset. I kind of think about what we're doing. There's 4 major platforms that we're focused on developing. One is the kind of social metaverse platform, where you see an early version of that with Horizon, with the Avatar system. And that's an area where we're really, we're iterating out in the open, right? It's a kind of a live, early product platform. And that's evolving quickly. But obviously has a long way to go before it's going to be what we aspire for it to be. But that's one important area that's, given what we do is sort of the social company that's about people interacting, how you express yourself in all forms, the kind of expressive avatars, the photorealistic avatars. We think we're doing some leading work there, but obviously we need to get that into the product and continue iterating on that. VR is the second major platform. And there, I think that there's going to be a consumer-focused product that probably will reach very large scale. But there's also, I think, going to be a work-focused product that, it's like you don't, do most of your work on a $500 device. We have computers and workstations that are much more powerful and have more technology in them. And I think that that's going to end up being similar here as well. So we started that with Quest Pro, and we're sort of at the start of the journey there. The 2 other areas which are mostly, which are still internal, is a lot of the work on augmented reality, which is a quite a large effort, but we think is going to be just a huge part of the value that gets created over time. And there, a lot of what I'm judging is, how well are the R&D efforts going? There are some kind of basic things that we need to get right, some integration of things, some figuring out how to manufacture things, and where we're making progress on that. And I'd say, a bunch of that is that there are some things that are going better than I expected, some things that seem like they might take a bit longer. But overall, I mean, there's none of the indications that I have would suggest that that anyone else in the world is doing leading work ahead of us in those areas, even though we haven't obviously shipped the AR glasses yet. And then the fourth platform, after the kind of social platforms, VR and AR, is neural interfaces, which I think the kind of wrist-based EMG interface, which is, for all these computing platforms, there's going to end up being, input is a really important part. How do you basically control the computing platform? And we think by the time that you have glasses and you're kind of walking down the street with glasses, you're not going to have controllers with that. You're not going to want to have your hands kind of like hovering in the air, and you're not always going to want to talk to the thing, even though that's going to be one way that we use them a bunch of the time. Sometimes you're going to want something that's more private. So we think that having a discrete way to basically communicate with the device is going to be critical. And that's also an area where, as far as I can see, the research that we're doing is really leading here. So it's a pretty big surface. I know that sometimes when we ship a product, and there's a meme where people say, "Hey, you're spending all this money and you've produced this thing," and it's I think that that's not really the right way to think about it. I think that there's a number of different products and platforms that we're building where we think we're doing leading work that will become launching consumer products and then eventually mature products at different cadences in different periods of time over the next 5 to 10 years. And in all of these areas, I think the teams are making very good progress, and I think that this will be fundamentally important for the future. Nothing that we're seeing suggests that that's not going to be the case. We are pacing a bunch of the investments given the kind of macroeconomic environment and the rest of the business performance. But ultimately, I mean, look, I get that a lot of people might disagree with this investment, but from what I can tell, I think that this is going to be a very important thing, and I think it would be a mistake for us to not focus on any of these areas, which I think are going to be fundamentally important to the future. So we're going to try to do this in a way that is responsible and matches the way that the rest of the business is growing over time. And I think we've built up the team to a point now where I think we'll be able to kind of match that growth with the rest of the business more going forward. But over time, I think that these are going to end up being very important investments for the future of our business, and I think is some of the most historic work that we're doing that I think people are going to look back on decades from now and talk about the importance of the work that was done here.
Your next question comes from the line of Mark Mahaney with Evercore ISI.
I want to follow up on a prior question. It's back on the ad tools, and I'm trying to figure out how much of a priority it is for the company and how long the company thinks it can take to kind of recover or to create a new, probabilistic ad attribution model, probabilistically based ad targeting model. This is something that took $10 billion, maybe out of your business. I mean, it had a material financial impact. And listening to the call, I just don't hear it as a major investment priority. So the question is, is it a major investment priority, or is it that goal is just elusive and it's better to focus on other things? Thanks a lot.
Hi, Mark. I'll take this question. We have continued our broader work to rebuild meaningful elements of our ad tech so our system can improve performance and measurement and we've been making investments in the short and the medium term and over the long term. In the short and the medium term, what we've been very focused on is evolving our ad system by growing on-site conversions with products like lead ads and ads that click to message. And we're continuing to make investments in AI, machine learning to improve measurement, targeting, and delivery. We have been pleased with our progress that we've made this quarter to help advertisers improve performance, targeting, and measurement. I would be remiss if I didn't talk about how AI and ML is really helping advertisers. One example of this is Advantage Plus Shopping. We launched it in August. It's a product that's enabled by machine learning that helps clients test, learn, and optimize their campaigns faster. It's early, but a recent test across a cross-section of advertisers found that those using Advantage Plus shopping campaigns saw a 32% increase in return on ad spend. Over the longer term, we're focused on investing in privacy-enhancing technologies, both our own portfolio of solutions, but also working with the industry to do that. And all of this is in the spirit of investing in this technology to help advertisers get more value. Great, thanks, Marnie. Operator, we have time for one last question.
Thank you. That will come from the line of Brent Thill with Jefferies.
I think kind of summing up how investors are feeling right now is that there are just too many experimental bets versus proven bets on the core. And I'm curious if you can just add more color why you don't feel these are experimental. You feel like they pay off. There's obviously a lot of focus on the investment side, and I think everyone would love to hear why you think this pays off.
Yeah, let me take at least part of that. I mean, we're making a number of investments across the portfolio. Marnie outlined some that we're making in the ad space. Obviously, the investments that we're making in product areas like Reels and the business messaging platform at WhatsApp are ones that we think will have a significant payoff in business, both in terms of engagement and monetization. So we're making a wide portfolio of bets. Still the majority of our spending is directed towards our family of apps investment, and those are across both engagement and monetization, leveraging AI in many cases, and we're making good progress on those fronts. And then leveraging as well what is today, a fairly under-monetized resource in terms of our messaging platforms, building more scale around those as being a source of future revenue growth. We've already proven it out with our business, our click-to-message ads with a $9 billion business today, but we think we can build a substantial sized business around paid messaging, which will complement that as well. So, I think we've got a lot of bets across the family of apps portfolio, in addition to the work that we're doing on Reality Labs in the metaverse.
Yeah, I mean, I just say that there's a difference between something being experimental and not knowing how good it's going to end up being. But I think a lot of the things that we're working on across the family of apps we're quite confident that they're going to work and be good. The Reels work, the discovery engine work, all the ads work on signals, the business messaging work. We can't tell you right now how big they're going to scale to be. But I think that each of these things are kind of going in the right direction. Obviously, the metaverse work is a longer term set of efforts that we're working on. But I don't know. I think that is going to end up working too. So, yeah, I think that there are a number of different. There are a lot of things going on right now in the business and in the world, and so it's hard to have like a simple, we're going to do this one thing and that's going to solve all the issues. I mean, there's macroeconomic issues. There's a lot of competition. There's ads challenges, especially coming from Apple, and then there's some of the longer term things that we're taking on expenses because we believe that they're going to provide greater returns over time. And I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded.
Just adding to what Mark just said, it is a challenging time for advertisers, and what they are focused on, given the economic uncertainty, is getting a strong return on investment. Going back to the family of apps and services, Reels continues to be the fastest growing format on Instagram and Facebook, and it is a great way for people to discover new interest creators and connect with businesses. What we're focused on is making sure that that businesses get a strong ROI on Reels. And one example that shows that we're delivering on this in terms of our investments is Corksicle, which is the insulated drinkware brand that added Reels to its business as usual strategy and saw a 34% higher return on ad spend and a 34% higher sales. So we are making progress with our investments and helping advertisers find that ROI that they're looking for. Great. Thank you, everybody, for joining us today. We appreciate your time, and we look forward to speaking with you again.
Okay, team. So that was the Meta earnings call. I bought a little bit, about 15 shares of this. Now, again, this might go wildly against me, but it's very small. Again, we bought 15 shares. We're down $20. We might add a little bit more down to 100. I'm skeptical of Meta's long-term future and longevity as a social media platform, but I think short-term there's objective value here. I think we'll probably bounce back, but maybe not. And if we don't, it's going to be a small loss. With that said, though, guys, if you haven't checked out Top Step is a sponsor of mine. One of the ways you can trade these big releases here, if you look at the E-mini, right, and then you look at Meta, the E-mini reacts just like stocks do, right? So, I mean, you can see the E-mini breaking down just like Meta is, and you can day trade this right one here with no PDT restrictions, instant settlement, all that good stuff, shorting ability in the futures market, no PDT restrictions in futures, so you can day trade short it as much as you want. Top Step is a funded account program for futures, and so they give you a demo, and if you can hit their target on the demo while following all their rules, conditions, and phases, then they fund you between $50,000 up to $150,000 with a 90% split. They're regulated by the Chicago Mercantile Exchange. They pay out millions, fund thousands of traders a year, and it's a lot cheaper to get involved with Top Step in the futures market than it is to put up the money yourself and risk that. There's a lot of risk that comes with that, and so if you want to trade the futures market, check out Top Step. Here is that link if you want to check it out. Great way to help support the channel. But yeah, Meta breaking down big here. Huge drops for Meta. Really, really weak coming through here. And so again, let me know what you guys think. We're going to do a premiere as well, guys. We're going to do a premiere of our Chart Prime video. We got a detailed video breaking down how to use Chart Prime. We got the link for that in chat. Also, check out StonkTech. StonkTech is a trading social media platform. They do go live tomorrow, and so y'all be ready. Check them out. Here's the link for StonkTech as well. Great way to help support the channel. Check out Stonk, trading social media platform, giving you free tools and all that stuff. But again, guys, we do have our video going over Chart Prime strategies that you can use to kind of use them to identify moves in the market. It is about to premiere right now, and you won't have to go anywhere. We're going to close this stream down, and immediately after closing the stream down, it's going to bring you straight to the premiere for Chart Prime. And so if you haven't already, let me make sure I can redirect you guys there. It should allow me to. Yeah, there we go. Okay, so again, as soon as I close this stream down, it's going to bring you to the Chart Prime premiere video. We will be back bright and early tomorrow morning, guys. Y'all be ready. Okay, y'all be ready. We will be back bright and early tomorrow morning. So again, we'll see you guys over at the Chart Prime premiere. And again, y'all be safe. This market's crazy. Market's breaking down. Amazon, Apple earnings tomorrow. It should be a crazy fun day. We got earnings dropping tomorrow morning as well that are big. And so again, hit that subscribe button if you haven't already. If you're watching from home, we cover all the major economic releases, all the fundamental news, all the echo releases, CPI, FOMC rate hikes, big earnings, all that good stuff. We cover it all completely free. We don't sell anything. We don't charge for anything. And so with that said, good luck, and we'll see you guys over there. Again, you won't have to go anywhere. We're going to close the stream down, and it'll bring you right to the Chart Prime premiere. And so we'll see you guys in just a second.